Hey everyone, Sky Jones here from Blanca Commercial Real Estate's Tenant Advisory Team, and I am here with you today to share some market insights as it relates to the local industrial market and what it means for you in your facility. So picture this, you've been in your space for X amount of years now and you're evaluating your real estate strategy. And the past couple of years, you've had to deal with the macro level economic uncertainties. You've had to deal with likely rent hikes if you've had to transact since the onset of COVID-19. And furthermore, you've probably had to deal with the lack of flexibility and negotiations from landlords alike all across South Florida. And one day you're driving into the facility and you're driving by the same warehouse parks day in, day out, and you can't help but notice every time you drive by, the same spaces are dark and it appears that they're not being backfilled. And come to find out, you realize that vacancies are through the roof and that now tenants actually have the leverage. I'll caveat that, larger 50,000 square foot up tenants and above actually have leverage. And you realize that now, for the first time since the onset of COVID, there's actually an opportunity to lock in more aggressive deal terms than has historically been achievable. Well, I'm here to tell you that I have good news. This is more than just a story. This is the current reality for the Miami industrial market. And the high-level overview is that 2024 was a massive turning point. You had net absorption, that is the effect of the net effect of tenants taking and giving back space on the market, was posted at 950,000 square feet for the year. The 10-year historical average, can you take a guess? 2.3 million. Pretty stark contrast. And then you look over at leasing activity and we're down 2.3 million on that as well. You put these together and you just realize that there's been a supply surplus, and furthermore, a tenant base that has been cautious to make long-term commitments, which has ultimately slowed demand. So in essence, it's a classic supply-demand imbalance. It's opened up opportunity for a number of tenants to lock in much more aggressive deal terms, again, than has historically been achievable. So I break this out into supply and demand, and starting with the supply, and I'll start with the existing supply. One of the most dramatic shifts in the market has been the fact that the existing vacancy, his direct vacancy that is, has essentially doubled from 3.6% now up to 7.2%. And then you look at the fact that there's been 6 million square feet of warehouse space that has been delivered within the past year. And we also have an additional 4 million square feet that is underway. And I'll add that of all these new deliveries, only about 25% has actually been pre-leased. What does that mean? That means that we're about to have a lot of vacant industrial space come onto the market by the end of this year. Call it about 7.5 million square feet. And then the question becomes, how long is it going to take for this space to actually absorb? And what I can say on demand is that so far from tracking tenants in the market, we're on par with, assume that we'll have a year that's comparable to the 10-year historical average. So 2.3 million square feet a year. Doesn't take a genius to put the numbers together and realize that 7.5 million square feet of space coming online, 2.3 a year. It's going to take at least a number of years before the space is fully delivered, which means that for now, tenants have the leverage. But I'll segment out where the demand is currently occurring, because this plays into exactly who has leverage and how much leverage you really have. So of the 85 transactions that we had tracked across the entire market in 2024, 83% that were done were below 70,000 square feet, which means most of the demand is in the smaller tenant base. And I'd say whenever you segment that out even further, majority of the existing tenant base in the market, 60% actually, is 30,000 square feet and below. This is where most of the demand is currently occurring. That means 24 of the 85 deals were actually 70,000 square feet and above. So this means two things. Number one, if you're 30,000 square feet and below, it's still a very tight market. It's kind of more business as usual, high rental premiums, and it's difficult to generate leverage on your own. All the more reason that any piece of leverage that you can get, whether that's working with an advisor or leveraging your tenancy in the market, all the more reason to do it, because it's a very tight market in that market segment. And furthermore, if you are a large tenant, call it 40,000 square feet and up, you have considerable leverage with landlords, because from the demand, there's not a lot of requirements out there in your market segment. And anecdotal sentiment that I've received from select ownership groups is that whenever they find a tenant in the size ranges, the larger, the more leverage you have, of course, they quote, hang on to them by the ankles and they don't let go. So for what it's worth, and a couple of deals that that I think are important to call out, just to say, I mean, there's been a lot of deals, but there have been large deals that have been struck. Some of the more notable are Steel Corp had signed 250,000 square feet at Flagler Station in 24. You have Double Ace Cargo, who secured about 150,000 square feet along 82nd Ave. And then, of course, you have Century Tire, who took about 160,000 square feet at County Line Park. And these deals just prove that the demand's certainly out there. But again, with all the other sentiment I provided, they are few and far between. Now, as for rates, the impact that this has had is that and tenants are thrilled to hear this, but for the first time in many, many years, we've actually seen a little bit of softening. Rents have went from about 17 and a quarter down to about 16 and a quarter. So they've dropped about $1, which is an indication that there's certainly more leverage in negotiations. Landlords are getting a little bit softer on their asking rents. But I will add that while we expect some additional cooling to occur, as a tenant, don't expect that rents are going to go back to pre-pandemic levels. And the reason I say this is because while, again, rents are softening, landlords aren't slashing rates because land and construction costs remain incredibly high, and a lot of landlords' basis on new developments is too high to where they can't go below a certain threshold without frustrating and potentially even losing LPs. But they have been structuring deals in more creative manners with concessions like free rent, tenant improvement allowance, etc., an effort to get deals done. And that's where the opportunity comes in for select tenants. So I know we covered a lot here, but the main takeaways for you as a tenant, or specifically if you're, call it 40,000 square feet and up, if you can do a deal from now through the end of 2027, do it now. Right now, you have all the leverage that you're likely going to get. And after 2027, the market is expected to start again and rents will continue to climb. So if you can strike a deal, do it now to hedge against the future. And I would also advise considering long-term deals, depending on where your business is and if that aligns with what your business strategy is. If you're 30,000 square feet and below, all the more reason work with an advisor, someone who can generate some leverage for you, because that market segment is still tight and that's where most of the demand currently is. And lastly, I'll add that, look, this is a window of opportunity. As mentioned, I said from now through, call it the end of 2027 is what we're estimating. That's when tenants are going to have leverage. But again, once this space is absorbed, there's essentially nothing in the construction pipeline after this new wave of supply. So once this is absorbed, there's not going to be anything new to come online. Vacancy is going to come back down to more normal levels, if you will, and rates are going to go up again. So if you can do a deal, do it in the near term. Anyways, if I can be a resource for you in any way, shape, or form, please let me know. And thank you for watching this market report.